If your stops keep getting hit and your account keeps shrinking, it's not your strategy, it's your risk management. In this short video, I'm going to show you how professional traders use ATR plus position sizing to protect their accounts and grow consistently step by step. Most traders do this. Random lot sizes, fix the stop losses like 20 pips, 30 pips, risk way too much on one trade. And what happens? You get stopped out too early, you lose big when you are wrong. That's why most traders blow their accounts. So today's video is going to be a fix for all these problems. This is how you do it. You need your stop loss to match the market. You need your lot size to match your risk. That's where ATR and position sizing comes in. ATR simply means average true range. All it does, it measures the volatility, how much the market moves. So instead of guessing your stop losses, you let the market tell you or decide higher volatility means wider stop losses. Low volatility means tighter stop losses. It's that simple. Why most traders fail? Here is the mistake. People use stop losses. They use ATR to set their stop losses, but they keep the same lot size. That's very dangerous because bigger stop, bigger losses. Smaller stop, smaller losses. Your risk becomes inconsistent. So I'm going to show you, here is how the professional traders do it. Step number 1, decide your risk, for example, 1% per trade. Step number 2, use ATR to set your stop losses. Step number 3, adjust your lot size based on the stop. Now your risk stays the same for every trade throughout. So let's break it down. Let's say your account size is 1,000. You risk 1%, which is $10. Now let's say the ATR value is 50 pips. So we calculate it like this. Lot size is equal to risk divided by stop size. So in this case, you are going to say $10 divided by 50. It's going to give you a 0.2. That's your lot size. So this depends on which account type that you have. In some cases, you find out if you are using a cent account, if you are using a mini account, the value will be different. It may be 0.02, it may be 0.01. So I'm going to show you a website where you can actually just put the values and it's going to calculate for you. Make sure to go to the description of this video. This is for free, right? And you can get this same tool that I'm going to use or show you. If your stop loss was, let's say, 25 pips, your lot size becomes bigger. If your stop loss was, let's say, 100 pips, your lot size becomes smaller. Let's quickly jump in and show you on that website, right? So here you are going to simply put your account currency. If it's a US dollar, you put US dollar. If it's JPY, you put JPY. Pound, you put pound. So my account that I want to use here is 1,000 US dollars. So I'm going to put USD. Here you put the account balance. Here you put the risk percentage, which is 1%. Here you put the pips that you get from, or that you want to put your stop loss, how many pips you want to put. So for example, if you're using 100 pips, if you divide right here, you can see this is the same value that we're getting on mini lots, right? You're going to use a 0.1. If it's a standard, it's going to be 0.01. So in most cases, you're going to be using this mini lots right here. It depends with the type of account. In some cases, you may be using this type of accounts, the micro accounts, right? So it's still risking $10. Let's say you reduce this, your stop loss is 25 pips. If you put 25 pips and hit calculate, you can see the standard lot you have to risk 0.04. The min lot is 0.4 instead of 0.1. So now you still risk the same amount, which is $10. Let's say your risk was here 50 pips, as in our example. You hit the 1%, simply means 0.2, right? So let's get back and show you more. So this changes everything because now you stop over risking, you survive losing streaks, you grow your account slowly, steadily, but safely. This is the difference between gambling and professional trading. So another powerful tip, use ATR multiples for better stops. If you want a tighter stop, you use 1x or 1 times ATR value that you get. So my best, or maybe my favorite, is actually the balanced one, which is 1.5x of the ATR. If you want to be more safer, you use 2x of the ATR, right? This helps you to avoid stop hands, noise in the market. So let's say, for example, if I'm talking about 1x of what? Of the ATR. So if the value was 50 pips, if you multiply by 1x, it's still 50 pips, right? But if you are going to use a 1 point what? A 5x, it's going to be 75 pips. If you're going to use a 2x, it's going to be 100 pips, the stop loss. This is how you set your stop losses. So I want you to avoid making these common mistakes, risking more after a loss, using fixed loss sizes, ignoring the volatility in the market. If you fix this, your trading will change. This is the mindset that winning traders don't focus on how much I make or how much I can make. They focus on how much can I lose safely. That's the game. I hope this makes sense. So if you guys like what you're getting in this video, please make sure to subscribe to the channel and also comment below what risk percentage do you risk per trade, right? So let me quickly show you on a chart what I'm talking about. So if you go to a chart right here, you can clearly see where there's more volatility, like this area right here, you start also seeing the ATR, it's going up, right? The moment the volatility start reducing right here, it start also dropping down. So the moment you start seeing those big candles again, you start seeing it start also going up. The moment the sizes of the candles reduce, it also start going down. So I'm going to show you how you can actually see the value. So let's say, for example, yeah, right here you have loaded the what? The ATR. So this ATR is actually for free. You can use it for free. So let's say, for example, I want to show you something that is very interesting right here. Maybe let me show you on a chart so that you can actually understand it. So this is my trading system. This is my strategy, right? Let's say I receive this signal that you see right here. I'm going to put a vertical line so that I mark exactly when the signal was generated right there, right? So let's say you were just trading randomly. You don't know about ATR. Before you watch this video, maybe you were just saying you put your stop loss just on the previous swing, which is this one. So as you can see, the market dropped right here. It created a lower low. It came back to create a lower high. It break that lower low. It creates another lower high. It goes down. It creates another lower. So most people were going to start by selling right here. When they sell, they put their stop loss just above, which is almost 200 pips, 210 pips right there, right? So if you were to take your trade right here, you put your stop loss on the previous swing right here, right? You can see the moment the trade started going down, at some point it was in profit, it came back, it hit you on the same stop loss. You can see this candle right here. It reaches exactly right here. So if you were to take your sell right here and put on the previous swing right here, just because you got the sell arrow, you put on the previous swing, you can see if I put the line here, this trade was stopped out, right? Just above here. It was going to be stopped out by the spread. You can see how wide is the spread here. So I want to quickly show you how you can calculate the stops using ATR. So the first thing that you do, let me say using the same example. If you check right here on this vertical line, this is the moment exactly when the ATR crossed right here, right? So let me just put another horizontal line when it actually crossed right here, right? So if you check when it actually crossed here, if you check to the right side, there's going to be values right here. So in this case, it's showing 2.11. So using this broker, the one that I have right now, I know that this is 200 pips, right? So in some cases, it may show you clearly if this was not gold. So this is gold, and I know that the broker that I'm using uses 5 decimals. So the prices that you may see, or maybe when you're checking, when it shows you 2,000, 20,000, I know that it's 200 pips, right? So in this case, I know that this is 200 pips, 210 pips, right? This was supposed to be the what? The ATR value at that moment right here when it crossed right here. So it was 200 and what? And 11. So if you were going to use your ATR value to put the stop loss, my favorite, I'll go for 1x, right? So which means I'll simply have to, my favorite is actually the balanced one, the 1.5x, right? So 1.5x by 211, right? This is 316, so we can just put it on 317. That's going to be your stop loss right there. So my stop loss for this trade, if I were to enter my trade right here, I sell, my stop loss from this line should be 300 and what? And 17, which is somewhere around up here. So if you check, the stop loss will be somewhere around here. You can see even this candle here, it did not even touch here, but it went on, it dropped. So if I'm setting my take profit, I want to use by 2, right? Whatever I set the stop loss by 2. So in this case, I was going to say if this is 316, which means by 2, I'm going to have about 630 something, 633. That was going to be my take profit. So if you check, if I draw from here, going down, this 600 pips, this is 640, which means the take profit was going to get hit right there, right? So if you go maybe, let's say, to another trade, I want to show you something that is interesting. Let's say you guys are trading, you're in the market right there, right? You see this is another, when it drops, it gets into this zone, it drops, right? So for those who want to have this trading system, you can also contact me. I'll put my contact details on the screen, right? So here you can see there was a rejection in this zone. Most traders were going to simply place their sell trade right there. So I want to show you something that is very, very tricky. Right here, if you were to sell here, you put your stop loss on the previous swing, which is this one here, right? So you can see this price did not actually touch, but you can see how wide the spread is. The spread is for gold. It was going to stop you out right here. Even if your stop loss was above here, above this swing, it was going to stop you out, right? But if you go to that same criteria, how we set the stop loss the first time, this is the vertical line when we're going to place our trade, and then this is actually when it crossed. You can see this side, it was actually 224 pips, right? So if you were just risking a 1x, maybe it was going to get stopped. I don't know. From year to year, that's how when it was going to get stopped. So personally, I don't use tighter stops. I use something that is balanced, something that is favorable for me. So in this case, this was going to be 224, right? By what? By 1.5x, right? Which is 336, right? So if you check from here to here, that's 200, 250, 300, which means above, right above here, 336. It's right above this line here. That's where 300 was, 336, 339. So it's somewhere around here. You can see it was going to be respected right here. The same thing applies even if you come here. You can see if you enter your sell here, it comes back, it takes you out, it goes your direction. This is the reason why I always advise you guys to use ATR to set your stop losses. And it doesn't matter how many pips that you're going to, how many pips is the stop loss. Sometimes it can be 200 pips, sometimes it can be 20 pips, but the risk stays consistent. So if you like this video, next video I'll be talking about 2% versus 5%. I'm going to show you the graphic curve of the profits or the loss, right? So make sure to subscribe to the channel so that you get more videos like this. Thank you so much for watching the video. Don't forget to smash that like button for me. If you like this video, if you find it very useful, please make sure to subscribe to the channel. I'm also going to show you one of my trading strategies right now, but I'll just give you a brief of what you'll be looking at. So let's say, for example, if you're using this momentum transition wave, this indicator that you see here, this is a non-repenting indicator. So what I simply do, in the next video, I'll explain in detail. I'll be using a top-down analysis using the same indicator. So let's say, for example, if I can take this trade right here, you can see here it actually turned from red to green. So the moment it turns from red to green, if I put a line like this, you're going to see the exact time when it turned, which means we're going to start trading on this line here at 4 o'clock, right? This was yesterday, 4 o'clock. We are only looking for buy direction, right? So this is on H1 to determine the bias of the trend, right? So we need to confirm, which means we switch to a lower time frame. In this case, we switch to M15 to confirm the trend direction. Remember, we said it was at 4 o'clock we're going to start looking for. So if you put your vertical line again, this is 3, this is half 3, quartered, this is 4 o'clock on this candle, right? Which means you are looking for buys, because it's also green. So you can see on H1 it's green, M15 is green. If you go to a lower time frame, let's say M5, like here, we are checking the same time at 4 o'clock. It was going to be somewhere around here, right? So now we need to have those sniper entries. For you to have a sniper entry, we have already confirmed that H1 is green, M15 is green, M5 is green. We want M1 to be also green, right? So I'm going to switch to the same time, right? This was yesterday, I think. Today is 10, so we are going to put this is 9 at 4, right? So let's look for 4 o'clock right here. All right, you can see here, right here at 4 o'clock. This is where we start trading. This is where we're going to place our buy trade right there, right? So you can see this market moved in our direction, same direction. This was 176 pips. It reached 350 pips before it actually gave us the opposite signal, maybe probably around here. And then once you close the trade, you wait again to see when it turns green again, you buy again, it goes in your direction, right? So I'm going to give you this in detail. If you like this strategy, make sure to subscribe to the channel, hit the like button and contact me. I'll be making a video for this specific strategy. So thank you so much guys for watching the video.